Many deals didn't fail because people were inexperienced. They failed because people confused trends with fundamentals. And recently I was asked the question, Bibi, how can I differentiate between trends and fundamental? I'm going to break this down in the simplest way possible with examples you already understand. So what is a trend? A trend is something that makes a deal look good right now. Things like cheap interest rate, fast growing rent, or a city where everyone suddenly wants to move in. So here are common trends driven assumptions I see all the time. Rent will keep growing 8 to 10% forever. I remember seeing a deal late last year, 2025, and I saw an assumption of I think 15% growth, and I was like, in this time and date, I don't think that is possible. Another assumption that people normally think or use is interest rates will stay low. I'm sure most people have learned their mistakes right now because as a result of this type of trend, we sell properties foreclosing. Another one is we'll just refinance or sell easily. Fundamentals are what actually supports a deal, regardless of the market. So whether a market goes up, down, center, middle, fundamental will help it work. So things like jobs, income, population demand, supply constraints, cash flow, and debt structure. So regardless of what the market is, this will help ensure and support your deal. I'm not saying that the market will not impact it in any way. Yes, the market is going to do what it's going to do, but once you follow the fundamentals, it's going to help it stand because you bought it as a result of fundamentals. That means you bought it regardless. People have jobs, regardless, people's income are growing, regardless, there's a population demand and all that. So if you're buying a property and you take this as your priority rather than a trend, then once there's a market downtime, this should be able to fix it. Now, what are some common fundamental examples? Number one that I see or I look at is the property cash flows today. So literally, I don't want to buy a property that will not cash flow from day one. The other one is rent growth is conservative. So right now on my projections, I project either a flat or negative or 2%. I don't go more than 2% because of what I'm seeing right now. Another one is demand comes from real people with real jobs. So I look at population growth. How much of a growth are we going to have in the next 5 years, in the next 10 years? Because multifamily works with demand, with people. So if people are not there, how do you intend to survive? The next one is the debt can survive higher rate. These institutions like this, we always advise people to go for fixed rates. So regardless of a shift in interest rate, you're already locked in until you're ready to exit or until the time the loan is due to be paid. So either you refinance or you sell. Now, what are the two biggest differences between both? One, trends make deals look exciting. So when you see a period where there's a low interest rate, you all be geared up and you want to quickly go into deals and start using low interest rate and assume it's going to remain like that forever. But rather, what fundamental would do is fundamentals make them survivable. So if you are on a deal or you're trying to buy a deal, the question you should be asking is, does this make my property survive regardless? But trend will just make you all excited, so that's one big difference. So how many deals have failed recently, or how many deals have failed due to wrong assumptions of people following trends rather than fundamentals? Many deals failed because people underwrote trends as if they were fundamentals. When the market shifted, the assumptions broke, and we know that for a fact. And I'm sure you can relate with what that looks like. There are questions you need to ask when looking at a deal. The first is, does this deal rely on aggressive rent growth? Does it break if rates go up? Does it need a perfect exit cap for it to work? If yes, that's trend dependent. On the flip side, how do you identify fundamental deals? Now you need to ask this instead. Does it cash flow today? Can it survive higher rates? Is it demand driven by real people and real jobs? That's fundamental doing the heavy lifting. So I have my own take on both. How do you combine both trends and fundamentals, and when to use them? So the question isn't about if you should use trends or fundamentals, but the real question is, how do you combine them and when to use them? Fundamentals are the foundations. They are non-negotiable. Fundamentals must come first, regardless. Before I care about trends or apply trends into any of my deals, I need to ask this question. Does this deal cash flow now, or does this this deal cash flow at all? Is demand real? Is income stable in that market? Can the debt survive stress? So that's when you actually have to start doing stress testing of your underwriting to be sure that it checks all these boxes I just mentioned. Now, when do you use trends? Trends literally is like a bonus. It comes second place, not first place, yeah? Trends are not the strategy, they are the accelerators. If fundamentals are strong, trends can help you grow faster, improve returns, and optimize timing. So when do you get to use trends? You get to use trends when your fundamentals are solid tight. Trends will only help you decide when to buy, when to refinance, and when to sell. More of your acquisition and your exiting strategy. It just helps you, should I call it time? It helps you better time your acquisition period and your exit periods. When is a time when you shouldn't be using trends? But before I go into that, I would like to say that trends don't fix bad fundamentals at all. If a deal only works because rates are low, or when rent are assumed to spike, or exit are assumed to be easy, that's gambling, not investing. So here's a simple rule. Fundamentals keep you in the game. Trends help you win faster. In conclusion, many deals fail because people reverse the order. That is, they put trend number one and fundamentals number two. They chase trends first and hope fundamentals will catch up. It's not going to work. The investors who last are the ones who build on fundamentals and let trends work for them, not against them. So if you want to understand how I analyze my deals or analyze markets, stress test assumptions, and separate hypes from reality, connect with me or send a message. I'm always open to real conversations. The work speaks.